Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Dolly Varden Silver, a mineral exploration company focused on advancing its 100% held Kitsault Valley project located in the Golden Triangle of British Columbia, Canada. Of course, we're going to be diving into the silver sector today with none other than Shawn Khunkhun. Great to have you back on the show.
Good to be on, Jesse. Thanks for having me.
Extremely exciting times for silver right now. So many of the catalysts you've mentioned before on this show seem to be playing out, and we're now sitting around $43.70 as of the time of this recording. Year to date, silver is outperforming gold, and the gap between the two is widening. What are the main drivers that you see currently propelling the silver price? And do you still think this bull market is in its early innings?
Yeah, good question, Jesse. No, it's a really exciting time, and people in the space who've been long suffering are starting to smile a lot more. If I looked at the factors that are driving silver today, I think I'd start off with gold's leadership. So I think in every bull market, gold leads, silver lags, and then it outperforms. And so I really contribute a lot of the success that we're having in the silver space right now to gold. If we go back to April, which really marks the breakout for silver, silver's up about 50%, whereas gold is up 25%. So we're starting to see that silver outshine the yellow metal. However, what gives me a lot of pause in terms of are we getting into a place where we're moving into a euphoric high, what gives me pause on that is the silver to gold ratio. And so because we're still at an 85 to 1, I still think it is really, really early innings. But look, to summarize, look, I think all the reasons that whether it's the industrial demand, what you're starting to see now is some sovereigns are buying, right? Typically they were just focused on gold. Now the sovereigns are buying silver. But we're seeing participants, whether it's from the crypto world, that are coming into precious metals. And so generally speaking, it's more participants, but it's gold leadership, it's industrial demand, but it's still very, very early innings.
So the market cap of the physical silver space has recently surpassed that of Amazon, a single company in the Magnificent Seven. Silver's market cap now around 2.5 trillion. Now, it should be noted that this is calculated using all the silver that is estimated to have been mined so far. So obviously a lot of that lost to industrial use. By comparison, gold's market cap is around 25 trillion. Is this another sign, in addition to the gold silver ratio, that we're still tremendously undervalued at these prices?
No, absolutely, Jesse. Look, what I think is forgotten is the history of silver and the fact that silver is money. And, we talk a lot about what's pushing silver prices today, which is mainly industrial demand. But as investors come back into the silver space for that inflationary hedge, for that one true wealth, I think what tells me that silver is undervalued is just simply the nominal price. If we were talking about inflation adjusted pricing, we'd have a price that was 3 times higher than the current price, almost 4 times higher. So silver is, I've said this recently to many friends. If I was only allowed to own one asset, I could only be in one thing, it would be silver. And the reason for that is it's the only asset class that I'm aware of that it hasn't moved yet. Everything else has gone up exponentially. The price of the bell peppers that I'm buying at the grocery store, the gas I'm putting in my vehicle, the home I'm living in, everything's gone up except for silver. And so is silver cheap relative to gold? Yes, it's cheap relative to everything.
Yeah, that makes a lot of sense. And I actually answered Adam Taggart from Thoughtful Money, posted a poll on X asking if you could only own one asset and you lock it away in a vault for 5 years, what would it be? And I answered silver as well, because you're right. I mean, with gold ripping to new all-time highs, with so many other commodities, uranium, copper has done well. We're starting to see silver wake up, and I think it's just a matter of time, particularly when we look at what you mentioned in terms of its real value versus nominal. The entire silver mining sector is also extremely undervalued, an estimated total market cap of around 200 billion. Much like physical silver, it seems tremendously undervalued. And despite the recent rally in the miners, absurdly cheap overall, in my opinion. Do you think the market at large is starting to recognize the value of silver mining stocks? And is there a world ahead where we see financial advisors actually recommending silver miners to their clients?
So I think the evidence that the mining equities in large are very, very inexpensive is the fact that if we look at the GDX, the index that is home to many of the big miners, it is now trading at the same price it was trading when gold was 1900. So here we are with twice the gold price, and the stocks are trading as if the gold price was 1900. So I think that's evidence of how much value is in these miners. I think that the interesting thing is, like, the industry, those who are participants in the industry are selling stocks today because their shares are up 100%. But what they're failing to recognize is there is no generalist money here yet, right? That tide of capital is yet to come. And I can say that because I talk to generalist money all the time. And, the generalists, like those who, are very, very, diversified, might have a 1% weighting to the precious metals complex, and that's a very, very rare. Those who are out there who understand sound money, who understand having an insurance policy within their portfolio, they may be at 1%. But I think the reason this new era is so interesting is, there was a report out for Morgan Stanley recently where, we're all familiar with the 60/40 portfolio. And what was suggested in this document was a 60/20/20, a 20% weighting to precious metals. Now, I'm only 44 years old. I've only been at this for 22 years, but I'm surrounded by people that have been doing this for longer than I've been alive. And what they're telling me is never in the history of modern financial markets has a Main Street institution come out and suggested a 20% weighting. Like, this is a historic time. And what gives me a lot of confidence that it hasn't even begun is I'm constantly touring investors up to my property. And these investors, are looking to go from 1% to 3% weighting. And so, and they're not doing it. They're just thinking about it. And so, the world has been so consumed with the everything bubble. And because silver has not participated as of yet, so much of our world is passive money, which is driven by algorithms and technical data and plays on momentum. Well, we haven't had momentum in this space, and now that it's starting, it's just beginning. We're starting to see some capital allocated here, but I think it's very, very, very early days. And again, if you just look at the ratios, whether it's the Dow to gold ratio, the silver to gold ratio, these ratios are telling us historically this market is in its infancy. It's in its second or third inning.
And are you surprised at all that with the SIL and GDX ETFs both up over 100% year to date, that we're not seeing more mainstream attention being paid to the gold and silver mining space? I mean, they're completely crushing the broad market at this point. And yet, if we turn on CNBC Squawk Box, they're talking about Tesla or Amazon or Google. It's always about the Mag 7 and these big tech stocks. Do you think we're going to see that moment when the talking heads on the mainstream press start to talk about silver miners? And could that be a sign that maybe it's time to get out of the trade?
Well, look, if I think about some recent epic bull markets, one that comes to mind is crypto. specifically Bitcoin. And if I think about how the CNBCs of the world have treated Bitcoin, they were not talking about Bitcoin in 2017 when it was hundreds of dollars a unit item, right? They weren't talking about it even when it broke 10,000. It wasn't until it went through 60,000 that it became part of the establishment. And so if we were to take a parallel there and we were to look at when will silver garner headline news, well, a lot of investors in the gold space thought, when gold gets to 2,000, they'll be mentioned. Well, it wasn't until gold went to $3,000 an ounce that it became a topical discussion item. So I think in the case of silver, what I believe you're going to see here is you're going to see silver break $50. Okay. It's a self fulfilling prophecy. It's going to 50. This is the third attempt at it. And when it breaks it, you'll probably see it run initially 50% beyond that target. And I still don't think silver will be talked about in the Bloombergs and the CNBCs of the world. I don't think silver will become talked about until it gets to an inflation adjusted new high, which I think is around $150 an ounce.
I want to read a post on X recently by David Bateman, a billionaire who has been purchasing very large amounts of physical gold and silver. He said, when the equity markets turn and investors find no refuge in collapsing bonds, commercial real estate, or Bitcoin, gold and silver will eat the world. Very interesting quote there. I wonder if you ascribe to the theory that for the sector to really take off, we need to see the broad market collapse. That's kind of a narrative that's been out there. We need to see a rotation once the broad market finally turns over. Obviously, it's very overvalued by a number of metrics. Most people that I've spoken to speculate it's a massive bubble, and when it bursts, it's going to cause a lot of panic. And people see that as a moment when, of course, initially gold, silver, and the mining stocks can also go down. That on the other side of that, when people look to redeploy capital, they're going to be looking to the gold and silver sector. Do you think we need that for gold and silver to truly shine, or can the metals run alongside the broad market as it continues higher for the long run?
Well, look, I think the short answer is when we really get price discovery, it'll be after a event where investors rotate away from all of those assets that were just described there: bonds, crypto, traditional equities. We've reached some unprecedented valuations in so many asset classes. And what I would just say because I've got friends that have been investing in the space for many, many, many decades, and some of them are sitting on huge amounts of cash waiting for the crash and saying, I'm gonna really step into this gold and silver market after the crash. Now, I've opted to have a different strategy, and the reason for that is if you go back to the last great crash that we've experienced globally, it was the GFC in 2008. Okay. If you waited to buy, let's just focus on gold. If you waited to buy gold during the crash, you had to pay $680 an ounce. You could have bought it pre-crash for half the price. So prior to the crash, it got up to 1,000. So exactly like you said, it was hurt. Now, on a relative basis, it was a lot less hurt than other things. I think in that environment, I think the Dow went from, 18,000 points down to 6,000 points. So, your $100 Dow investment was worth $30, where, your gold investment still retained 67% of its purchasing power. So it outperformed traditional assets 2 times. But my simple point is get allocated now, right? Because so let's say, I think you're going to see $60, $75 silver fairly imminently. And at some point, yes, we will probably get a correction or maybe something even more painful. And in that, everything will pull back, but is there a chance that silver is higher during that crash than it is today? If it runs from here to 75 and then during a crash pulls back to 50, and if you're waiting for, and what are you using to purchase the metal today? You need to rotate out of another asset class. So I don't know. I'll just tell you just a quick story. So in 2020, I we had run in silver from sub $12 to $30 from March to August. From $12 to $30 in a matter of months. I knew that was an overheated move. I knew we were going to correct, but I didn't get out of the trade. Out of the fear, I couldn't get back in. And here we are today, 50% higher than that spike high to 30. So you're not going to be able to trade this market. You just need to buy it. You need to sit tight and be right. And whether you pay, $4 an ounce in 1990, or $40 an ounce in 2025, silver is actually cheaper today at $44 than it was at $4 if we factor in all the other inputs and if we factor in what's coming.
Very well said. Let's shift over to Dolly Varden Silver, starting with your latest drill results from Wolf Vein. You released them at the beginning of the month. Walk us through the important details and what they mean for the company.
Well, listen, I want to set the stage at Dolly a little bit. So, when we're talking about silver equities, you've got 10 primary producers. And outside of those 10 primary producers, you have less than 5 companies that are significant non-producers. So Dolly is one of maybe 13 companies that matter in the silver space, that has size, that has grade. We've assembled 5 past producing mines. We've assembled 100,000 hectares of ground in a safe, prolific mining district. And so the results we put out on September 2nd were the richest results the project has ever seen. So we drilled 1,422 grams per ton of pure high-grade silver over 21 meters. And so, why I think this is a special project is because most of the silver we get is a byproduct. This is a primary silver mine. It's high grade and it's in a safe jurisdiction. What these results really represent, though, is it represents numbers outside of the resource estimate. So right now, the company has, in both the inferred and indicated category, about 64 million ounces of silver. And we have 1 million ounces of gold. So on a silver equivalent basis, it's like 150 million ounces of silver EQ. This drilling represents that growth potential, right? And I think this project is going to demonstrate 100 million ounces of silver, 200 million ounces of silver equivalent. That's my target. And that's where I think we're going. And these results kind of validate that idea of moving towards a 200 million ounce silver district.
Well, you spoke about the Golden Triangle there being a prolific mining district. You wrote in your company presentation that you believe it is still in its infancy. So far already, it should be noted, we've seen 1.2 billion ounces of silver mined in the last 3 decades. So why do you think that district is still in its infancy?
It's called the Golden Triangle, right? And then, there's 10 times more silver that's been discovered, right? But it's known as the Golden Triangle. And if we just focus on the gold side of the triangle, in the first 100 years of the triangle, there was 5 million ounces discovered in the first century of the triangle, which dates back to the time of the Klondike Gold Rush in the 1890s. In the last 3 decades, in the last 30 years, because of indigenous land settlements in terms of certainty that the First Nations group have done their land claim settlements with the BC government, the provincial government, the federal government, because you've got that certainty around access and ownership, because of infrastructure improvements. So we've got roads, power lines, deep water seaports, all that's in place. And because the glaciers that used to cover much of this ground 100 years ago have receded and melted, what you now have in the last 30 years you've had 150 million ounces of gold outlined in the area. So 5 million ounces in the first 100 years, 150 million ounces discovered in the last 3 decades. That is why I think the area, we're just scratching the surface. Now, what we've done at Dolly Varden is, Newmont is arguably one of the best gold mining companies in the world, one or two on the planet, right? And their shares have done extremely well, from $30 to over $100 a share. They're operating two mines in the district. They're operating the Red Chris mine, which actually was just fast tracked by our Prime Minister Carney for its copper component. Now they're also operating the Bruce Jack mine, and the reason I bring this up is outside of Newmont, Dolly Varden has assembled one of the largest contiguous land packages in the area. So we've positioned her. I can't compete with Newmont, but what I've done is I've positioned the company in a part of the Golden Triangle that's unexplored, that's not gold rich, that's silver rich. And we're outlining with 5 past producing mines and a big mineral inventory a lot of opportunity to grow high grade pure silver. These mines worked when silver was sub $1. When silver was 85 cents an ounce, the Torbrit mine was Canada's third largest primary silver mine. You go back to the 1919 when the Dolly Varden Silver mine was in operation. Canada's part of the Commonwealth. We were part of the British Empire. The Dolly Varden mine was known as the richest silver mine in all of the British Empire. And if you think about the sun not setting on the British Empire back in those days, that's really saying something. There was a lot of steep competition. So we've got this rich history. What I've tried to do by bringing $150 million with some pretty strong investors like Eric Sprott, like institutions like Fidelity, corporations like Hecla Mining, we've brought $150 million. We've done systematic exploration, great science. We've done consolidation. We've bought projects. And now we are positioned, and we did this with a headwind. We did this in a sub $20 environment. And that's why we were able to do it. The best companies are built during the Depression, right? And we suffered through a depression in the precious metals market. That's the only time you can build real value and wealth for your shareholders. You've got to be out there doing stuff when no one wants to be there. We've now set our stage, and now that the market's come and the generalists are coming, right, we are trading at less than 5% of our in situ value, right? So there's a tremendous opportunity here when you've got billions of dollars of metal in the ground and you're trading at a fraction of that valuation. There is a tremendous re-rating, whether silver stays here, even if it goes back to $30, or if it goes higher, that headwind turns into a tailwind.
Well, you gave a great overview of your land package there, and we talked about drill results at the Wolf Vein, but maybe you could hone in on some of your other projects in that massive land package, which you've expanded significantly this year, and let us know your plans there for the future and milestones achieved so far, and anything else that comes top of mind when it comes to your overall land package and the specific projects within.
So look, I made a decision back in April to list our shares in the New York Stock Exchange. And on the back of that listing, we were very active. We made 3 acquisitions. We raised $30 million, and we started a 55,000 meter 5-rig drill program. So there's going to be a tremendous amount of results that come out to market, discovery-oriented drill results. But the way we've built this company, Jesse, is on the back of 2 pillars. The first pillar is acquisitions. The second pillar is discovery. And all I just let your audience know is, with certainty we're a scarce product, right? There's not a lot of silver opportunities. There's even fewer, probably one handful in safe jurisdictions. So Dolly represents a unicorn opportunity in terms of the safety, the size, the pure silver. But we're challenging ourselves to continue to evaluate new opportunities. And I think the greatest companies in our sector were built and grown on the back of M&A opportunities, right? So as much as we believe we've got a very special project, We are looking outside at evaluating opportunities and looking to grow. So we've got $40 million in the bank. We've got results pending. We've got supportive shareholders, and we've got a very deliberate vision, strategy, plan that we've executed. And Jesse, when we first met, this was a company that was measured in the tens of millions of dollars. Today, it's measured in the hundreds of millions of dollars. Our goal is to be measured in the billions.
And so when it comes to specific catalysts and upcoming news flow that shareholders can look forward to, what's top of mind for you right now?
It's really drill results that are pending from Homestake Silver. So this is a part of the property that is silver rich, but also has a gold byproduct. And so that's where we've had our rigs recently turning, and that's where I can expect to see the next round of drill results.
Well, I will end, as always, by opening the floor to you. Is there anything that we haven't yet covered or anything that you think it's important to emphasize when it comes to Dolly Varden Silver that you think potential shareholders of the company should be paying attention to?
No, I think it's more of a macro comment in that, look, there's two ways to speculate in the stock market. One is to buy low and sell high, right? And it's a strategy that, for those contrarian investors who've been around the bear market that persisted for over a decade, that was a great strategy. We're now we've had a paradigm shift, and we're now into the second way to speculate in the stock market, which is buy high and sell higher. And now that we've moved into a bullish phase, and if we go back to my earlier comments about the fact that more than 50% of capital is passive money, now that the algos and the technicians have picked up on this momentum, now the fact that Newmont, which is the only gold mining company in the S&P 500, the only gold mining company, is the best performing stock in the S&P 500, it's going to garner a lot of fund managers' interests. And they're not, in the case of money management, you don't look at what was the best performing stock. I'll use a basketball analogy here. I don't want to invest in Michael Jordan. I don't even want to invest in LeBron James. I want to find the next superstar. And that's where I think Dolly Varden is uniquely positioned. We are not Newmont. We're not trying to be Newmont, but that's where I think we become a very, very compelling value proposition.
Well, I'm going to put a link in the description below to the Dolly Varden Silver website as well as social media so people can follow along with the company. Shawn, always enjoy our conversations. Thank you so much for coming on the show.
Thank you for having me.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.